Well, hello and good morning. It's me, Geopolitical, your host of the party, and today is Tuesday, January 2nd, 2024. Yes, we are in the new year, and what a year 2023 was. Now we're just asking, will 2024 be the same? Well, here are the things you need to know. The geopolitical tensions are not going away anytime soon, so get that right out of your head. Global elections will be one of the topics on the year, as more than 60 countries are holding all kinds of elections. And is the Fed really going to cut rates by 6 or 7 times this year? And then what does that say about the economy? This morning, oil is up, gold is up, and Bitcoin is up, all while the VIX, the fear index, is lower. RSI, which is the relative strength index, teases the overbought level, right? And so we're going to have the pot roast, but we'll get to that in a moment. So what an ending to a year. Who could have seen that coming? Stocks and markets have been invincible. You can thank the newest narrative about those 5 to 7 rate cuts coming in 2024 as the reason. And that caused a melt up in stocks. In less than 2 months, we witnessed the S&P surge by 16%, the NASDAQ raced ahead by 20%, the Russell, the SMIDs, the small and mid caps gained a whopping 24%. Bonds were not going to be left out either, as we saw the TLT and the TLH both surged by 20% and 17% respectively, sending yields plunging to end the year, yielding 4.25% on the 2-year, 3.87% in the 10-year, 4% in the 30-year, 5.18% on the 3-month, and 5.03% on the 6-month. Down significantly from the rates we had witnessed earlier in the year, in November. Which leads you to ask, is there any strength left in this rally? Well, that brings up the relative strength index. And what is that? The RSI is a momentum oscillator, and it measures the speed and change of price movements. It oscillates between 0 and 100. 70 is the level that suggests the market is in an overbought condition, while 30 suggests that the market's in an oversold condition, right? The more it advances beyond 70, the more overbought it becomes, and the more it declines past 30, then the more oversold it becomes, right? As of this morning, the Dow RSI was 76.4741. The S&P was at 70.16. The NASDAQ was 68.363, and the Russell's at 65.96, while the equal weight S&P is at 69.921. You can also have RSIs on individual stocks. So for example, Apple's RSI is 51.06. NVIDIA's is 58.30. Cathie Woods' ARK, Disruptive Tech, is 61.5114. It's important to note that the RSI changes daily, right, with the price of the stock. Now, while you should never buy stocks based on their RSI alone, it is just another tool in the toolbox to help you understand the complexity of the market and of the individual names, right? You must pay close attention to either of the extreme readings, because that helps us gauge how easy it is for the market to surprise us and turn in the opposite direction versus what investors might be expecting. So for example, on 12/19, the RSI and the S&P ended the day at 82.1844, well above the 70 mark. And the S&P closed at 47.68. On 12/20, the S&P lost 70 points to end the day at 46.98, and the RSI fell to 66.125. And if you look at the S&P on August 18th or October 4th or October 30th, the RSI was sitting where? Right on the 30 line, suggesting we were oversold. And bang, what happened? In the days following, the S&P rose, and the rise off the October 30th was very dramatic. I mean, 16% so, right? Coincidence? Maybe. Maybe not, but it does fit the narrative, and it gives you some insight into the market technicals. Now, even when it hits 70, right, on the upside, it can keep going, and many times it does. And in fact, we saw that as the year ended, and as markets rallied, investor sentiment got even more bullish. You could feel that FOMO mindset, right, fear of missing out, no matter that the earnings per share estimates for the upcoming earnings season were being cut across the board. I guess you have to say trimmed, right? Don't say cut, because that sounds so dramatic and so negative, which raises the question, what's next? Let me remind you, reality can escape us, and the market can remain irrational longer than you can imagine. Reminding investors, don't go betting the ranch on any one day. When markets hit extremes of bullishness, investors often lose their ability to consider what could cause markets to reverse course. The same would be true for when the markets experience extreme bearishness, right? which is why I always emphasize the need to remain focused, right? Create and stick to a plan and make sure, you understand what you own, why you own it, talk to your advisor, because that's all very important. At the end of the day on Friday, stocks did end just a bit lower, but finished the year well into positive territory, right? By now, you know the great year 2023 turned out to be for the markets and for investors who were invested and stayed invested. Inflation came down, unemployment remains at historic lows. The Fed, it appears, has managed to navigate a softer landing, and now we're being primed to expect 5 to 7 rate cuts in 2024, something I adamantly oppose, just because it makes no sense based on the current environment. But this narrative has the ability to keep a floor under stocks, and especially if the Fed does cut rates, it will absolutely keep a floor under stocks. Unless, of course, the reason for the cuts is because the economy suddenly spins out of control and goes off the rails, right? But that's a whole nother story. Let's not go there right now. This, even as the geopolitical unrest hit levels not seen in years, and 2024 promises to have even more unrest, right? We still have the ongoing Ukraine and Russia thing going on, right? The Israeli and Hamas has no end in sight yet. And now we have the Houthis, right, Iran, causing all kinds of trouble in the Red Sea. Never mind ច្ចmaking all kinds of noise about taking Taiwan back. Now, this is a major election year around the world, right? More than 60 countries or 4 billion people are holding elections at all levels, right? Regional, legislative, and presidential. And these elections could have, or they can create, change in the status quo and most certainly ramp up the geopolitical tension. So prepare yourself for incumbent losses and turbulent public protests that could stabilize larger regions. So for instance, in Europe, countries there are bracing for a surge from the far right. In Asia, the Taiwan election has the ability to escalate tensions in the region, dragging the US and other allies into a chaotic confrontation with China as Taipei and Beijing continue to claw at each other, right? That's going to be an issue to watch in 2024. And in North America, here at home, we have the US presidential election with both parties still not really sure who's going to be at the top of the ticket. The left is trying very hard to eliminate the top GOP contender, Donald Trump, right, any way that they can. And that's already causing protests across America. On the other hand, the Dems also have to figure out what they're going to do with Joey and Cijě, right? As the polls suggest, plunging satisfaction across all measures with both of them, even among their own party. And that's the part that's really making them nervous, right? They're trailing the GOP in every national poll, leaving both the DNC and the GOP scrambling for alternatives. Now, across the closed southern border, we also have an election in Mexico, holding a vote that's going to most likely impact potentially trade and border insecurity or security, call it what you want. Now, I expect AI and other new tech to create all kinds of misinformation around the elections. Expect conspiracy theorists to push the misinformation. Expected new levels of misinformation from China, Russia, Iran, Hamas, and the Houthis as they try to affect the U.S. elections, pushing it all out on social media outlets. Think TikTok, which is by far ahead the leader in misinformation, Facebook, Instagram, and Twitter. And this is going to demand even stronger cybersecurity efforts and fact-checking, creating new and exciting investment opportunities in the space. And for the markets, well, can we see a repeat of 2023? We could, but most likely we won't. Estimates for the S&P range from 4,200 at the low end to 5,400 at the high end, right? So like a 10% decline or a 15% advance. But that's really a futile effort, right? Because who can really pick that? And 2023 is a perfect example of that, right? A more normal 10% gain would get us to around 5,250, 5,300-ish. Tech will continue to be hot. And not just the Magnificent Seven. Stretch your mind a little bit. Think outside the box. Tech is more than just 7 names. In fact, you're going to get tech and AI in almost any stock you buy. I also expect to see a rebound in consumer staples, utilities, and healthcare. Aerospace and defense is sure to remain a hot sector as global tensions heat up. Oil exploration and services, along with energy as a whole, are also sectors I think that investors need to put some money kind of as a foundational part of your portfolio, right? That's in my opinion. Always talk to your advisor. Overnight, U.S. futures were mostly flat. They began to lift ahead in early morning trading, but they have since turned negative, right? Barclays came out and downgraded Apple, so here you go with the Magnificent Seven and people, hitting the sell button. But it also makes sense based on what I said, that investors that want to lock in some of those gains are going to hit the sell button in early January, and any of the gains that they realize will be put off until April of 2025, right? Now, recall what I said, and I think it's going to continue in these first week or so of January, right? Is that you're going to see this selling, and after today's downgrade by Barclays, and then there's going to be speculation. I would expect that you'll see a little bit more, but that's not really anything to really be concerned about. You actually want to see the market pull back, right? Because we've had this tremendous gain. If you look at the charts, they go straight up in a line. I mean, trees don't grow to the sky, so you want to do that. And this is all happening, by the way, while earnings per share estimates have been coming down over the last month, right? The bar has been lowered. I expect that we're going to get the usual 75% or so of them beating the estimates, the lowered estimates. But listen to what the CC says about the forward guidance, because this is what investors are paying for. You're paying for the future, not the past. The past is history, and early indications are for weaker guidance. The story here is it appears that companies are expecting a slowdown, and that just means that they're going to start to lose their pricing power, which is positive for the economy, positive for the consumer, but a negative for the company, right? We're about to hear from 498 more S&P companies. So brace yourself, because there's going to be lots of information starting in a couple of weeks. Eco data today includes U.S. manufacturing PMI, and that's expected to be 48.2, which is still contractionary. Construction spending of up 0.5%. Tomorrow's going to bring us to November JOLTS, right? The job opening and labor turnover survey, along with the latest FOMC minutes. Just wait for that. Just wait to see how the latest meeting gets reinterpreted by the markets. Will the 5 or 7 cuts now be expected to be even bigger than the expected 25 basis point base? Oh boy, meaning are they going to cut by 50 basis points? We're going to find out. Later in the week, we're going to get the ADP report, and that's expected to show 115,000 new jobs created, while Friday's NFP report is also going to be the one to watch, and that is expected to show us 170,000 new jobs created, with average hourly earnings up 0.3 and year-over-year earnings up 3.9%. Unemployment's expected to tick at 3.8%, still at historic lows, which again only confirms that there's no need to cut rates at all, but even less so to see rate cuts of 5 to 7 times. But hey, I'm not on the committee, so take that with a grain of salt. I just don't see it. I won't see it until we start to see the economy go off the edge, if it does. European markets this morning are all starting the year in positive territory, although they've turned negative now as U.S. futures have turned negative. Energy names, think oil and gas, are leading the way higher there, or they were. Think tensions in the Red Sea. Eurozone PMI continues to be weak, suggesting that the region did enter a recession in the third quarter of last year, and this is causing some investors to bet that Christine Lagarde is going to change the narrative at the ECB, the same way JJ changed the narrative at the Fed. Oil begins the year on an uptick. WTI is trading up $1.45 or 2% at 73.07. Why? Well, first of all, we have the unrest in the Red Sea, and that continues to cause angst. But overnight, guess what China did? Yep, Bloomberg reports it with this headline this morning, right? China issues massive crude oil import quotas at the start of the year. Listen to that, massive crude oil import quotas, right? Saying that China has front-loaded its oil import quotas for 2024 with an allocation of private refiners and traders that nearly matches all of the allowances granted for the whole of last year in 2023. So that's very interesting because, I want to ask, they plan on importing 3.6 million barrels per day, and that's expected that Beijing is going to issue additional quotas later in 2024. So I have to ask you, what happened to that weak China story? The one that they sold you in the final quarter of 2023, right? Weak Chinese demand was going to decimate oil prices. Yeah, how's that working out for you this morning, right? Not so good, because they're going to import more oil than they did in 2023, which doesn't mean that the global demand is going to outstrip global supply, because there's plenty of oil in the U.S. and now that we are a swing producer, but it is not the story that they told you last week, that we can expect China to become weak. I'm not buying that story. Gold's also a bit higher, up $12 at $2,083 an ounce on continued hopes of the Fed rate cuts, right? Plural. Bitcoin continues to march higher as well, currently trading at 45,700, up 7.5% so far this year, and we're only 2 days into it. The VIX remains lower, continuing to suggest complacency, but don't get too complacent. Remember, investing is dynamic, not static, and look what's happening today. Futures are down. The Dow's down more than 200 points now. The S&P closed at 4769, a stunning 25% gain in 2023. But that was then, this is now. The slate has been wiped clean, and we get to start all over again. Expect the narrative here in America to continue to be fluid. Remember, in November, they weren't even considering a rate cut, and 6 weeks later, we're supposedly cutting 5 to 7 times. Pay attention to tomorrow's FOMC minds. They really, that really is what, is that really what's being said between the lines, that they're going to cut rate 5 to 7 times? We'll see. It's a new year. Make a plan. Talk to your advisor. And if you don't have, consider getting one, right? Because it's always helpful in times like this. If you're invested, you're good. If you have more money to put to work, be patient. It's okay. Don't chase anything. Let it come to you. Remember, it's time in the market versus timing the market, right? Call me to discuss. I'm happy to have that conversation at any time. Okay, so what are we having for dinner tonight? Well, we're going to have the pot roast. This is just a simple pot roast recipe. You can't hardly screw it up if you just follow the directions, right? You need one pot. That's all you need is one pot. So you're not making a mess in your whole kitchen. And so it takes a little time to prepare, but it cooks beautifully in your oven, all right? So here's what you need. For this, you need one, like 3.5 pound boneless chuck eye roast, right? You need a vegetable oil, you need a big white onion, you need chopped carrots, you need chopped celery ribs, you need 3 large cloves of garlic. You want to put that through the garlic press. You need sugar, you need chicken and beef broth, you need fresh thyme, water, and a 1/4 cup of red wine. You also need a pot that can go from the stove into the oven with a lid. So don't use all metal, don't use anything that's got plastic or rubber on it. Now, begin by turning your oven on to 300 degrees. Make room in the center rack so you can put the pan in there when you're ready. Now, you want to take the roast, you want to pat it dry with paper towels, season it generously with salt and pepper. Heat the pot up with oil until it shimmers, right, when the oil gets really hot. Now, brown the roast on all sides in that pot. Maybe it takes you 8 to 10 minutes, whatever. You just want to brown it, get it kind of crusty, right? Now take it out and just put it on a plate and set it aside. Reduce the heat to medium. You're going to add your chopped onions, your celery, your carrots. You're going to saute that for 10 minutes or so. Now you're going to add the garlic. You're going to add 2 teaspoons of sugar. You're going to stir that to mix. Now you're going to add in 1 cup each of chicken broth and beef broth, and you're going to throw in a twig of thyme. Return the roast to the pot and any juice that it produced that's on that place. Now add enough water just to cover halfway up the sides of the roast. Don't submerge it, just halfway. Cover the pot with tin foil and then put the lid on top of that to secure it. Transfer it, now put it in the oven. Turn the roast about every 30 minutes or so until it's about fork tender. Should be 3.5 or 4 hours. So this just takes it's a long, slow cook, right? Now remove the roast and put it on a plate, cover it with tin foil. Skim the fat off the top if there's any, and then toss away that sprig of thyme. Bring it to a boil, let it reduce by half. Now add in a 1/4 cup of red wine. Boil again for about 2 minutes to allow the alcohol to burn off. Season it with salt and pepper to taste. Now, if you prefer not to use the red wine, just use beef broth instead, right? You can do it, it'll have a little bit of a different flavor, but you can do it without the red wine. Put the meat, pull the meat apart now with 2 forks, transfer it to a warm serving platter, and pour 1/2 cup of the juice all over it. Serve it immediately with, a large mixed green salad and maybe a green vegetable. I would just eat this with a large mixed salad. I wouldn't be making all kinds of vegetables on the side because there's lots of vegetables in there, right? Celery, carrots, and onions. Anyway, one way or the other, look at this. It's a beautiful day here in South Florida. It's about 68 or 70 degrees right now. It is absolutely gorgeous. You can see behind me, there's a little bit of cloud in the sky, but the sun is still coming up, so we'll see. I'm sure it's going to be a beautiful day in South Florida. Until tomorrow, take good care.